want to ask you, speaking about billion-dollar drugs, Otezla's was purchased for $13.4 billion, I believe.
Yeah.
And I want to ask you that drug is geared towards psoriasis. Is Otezla still relevant today for PD4 D subtype inhibitor, or is there another drug out there that's better than that?
Certainly not FDA approved. There is for Otezla's approved for psoriasis. It's one of the only oral treatments for psoriasis, so it gets used a bit. It came from Celgene. Celgene actually discovered that drug by themselves and had to sell it to Amgen when they joined forces with Bristol Myers. The PDE world has not seen too much excitement. I think most people are more interested in like a direct mechanism like IL-13 or IL-21 or something like that. And so some companies are even doing oral IL-21s. But the phosphodiesterase PDE is like this pretty vague mechanism that has a lot of off-target effects. There's also Daxis, roflumilast, and that's being developed for a number of different indications. But in terms of psoriasis, I think it's the only game in town. But its patent's expiring pretty soon.
Type 1 diabetes. I know Lexicon has been trying mercifully for years to try to get their type 1 approved by the FDA. But again, recently they were rejected once again. I think I believe both the AdCom. I'm not sure if the FDA ruled on it yet. But also AstraZeneca was axed in Europe. Both of those drugs specifically, I think Zynquista and 𝗿𝗏𝗏.
Yeah.
There was no other drugs out there. I know one of the companies I'm invested right now is trying to capitalize on that. Can I ask you, do you know of any other company out there that are working on I would say outside of the oral type 1 diabetes drug?
Yeah.
Do you know of any prospective company that are working on it, specifically phase 2 or higher?
Yeah, Vertex is the leader in this space where they're developing a cell therapy for type 1. They seem very committed to curing type 1. They had the same kind of attitude towards cystic fibrosis. They did really, really well with their CF franchise. They're now one of the biggest drug companies in the world. So it's not like a 10x upside kind of company anymore. They already had their 10x moments several times. So it's a pretty big market cap. But Vertex VRTX has probably the most promising type 1 cure strategy. And I do think the day is coming when, we will see type 1 go by the wayside. I don't think you can just take the type 2 drugs and throw them at type 1. It's a really fundamentally different disease. And that's why the lexicons and so forth have had a hard time. Type 1 is, it's very, very different. It's an autoimmune disease. It's really long-term disease. It's like totally tricky, but I do think that Vertex is leading the way there.
You're massively short via common.
Yes.
I'm looking at the vol and implied volatility on these weekly strikes, and they're obviously very rich premium. So why not, short calls, with a different expiration date instead of just commons? And I'm looking at the option flow. There's actually a good amount of people buying short-dated calls for early December, so I'm assuming they're trying to squeeze people out, then knowing that it might come later.
Some of that is me buying calls to magnify my short position. So I think
really out of the money.
Not really out of the money.
Like 40, 44.
Yeah, those I think are hedges too. My partner pointed that to me yesterday. There was some unusual flow.
That's right.
There, and he thought those were hedges, but clearly, it could be somebody bullish, and that's fine, or somebody trying to squeeze. I try to just focus on my own thesis. I don't love talking to other traders, only a handful, and I think, if you pay too close attention to the market prices, you kind of go a little crazy. So for me, I'm happy with my strategy. It's a high there's no free lunch, right? So my strategy burns theta. I lose tens of thousands a day, on theta. And, that's the downside of my strategy. But the upside is I don't fear the stock going up a ton, although I wouldn't want it to happen. I don't care what time it comes out, other than I'm losing my theta. But I'm not all in on, say, one date. I can spread that risk a bit and add to my position. If I lose that theta, I hope to make it back on the eventual date. Now, if you are just long vol, you obviously have tons of risks. If you're short calls, you're taking this very open-ended risk that could, result in a really bad situation if there is a positive event. If you're not going to make this your whole portfolio, I think that's probably the way to go. Because if it's delayed, you win. If it's bad, you win. If it's good, which seems extremely unlikely, you will lose. But in most situations that are realistic, you make money. So I think the short call strategy is really good. The most you can make is 100%, which is still a lot, but you'd have to put a couple percent of your portfolio or more in it to matter. And in which case you're probably going to be out of business or wiped out if it does work. Now you could short a call spread, you could do other things like that, but it's everyone has to decide for themselves what they're comfortable with. And some people have portfolio margin, some people don't, some people can't trade options, some people can, some people have prime brokerages, most people don't. There's all kinds of questions as to how to get this right perfectly. And I've purposefully tried to sort of stay away from coaching anybody on how to do that, because everyone has a different broker, everyone has a different amount of money, everyone has different goals and needs. If you want to go all in, make a fortune here, the way that I'm doing it is probably the way to do that. If you want a safe, conservative 10 or 20% or 30% return in a short period of time, buying puts is probably okay, especially if you can sell calls and neutralize that calendar problem. Selling a call spread's probably even better. You could sell a call spread every week, theoretically. So there's a lot of ways to do it, but my way is a magnified return, magnified risk way. I have very high conviction, so I'm willing to do that. But I could understand if somebody's listening to this and saying, I like what he's saying, but I'm not him, and I don't have the conviction he has. I don't know this guy from a hole in the wall. Let me just make a small bet. And yeah, in that case, I think the December puts or the January puts will make you a little bit of money, and you could just dip your toe in for whatever is a very small amount of money for you, whether that's $500 or $500,000, whatever small is small for you. And you just say, I'm going to check this out and see how it goes. And it's all up to the person. So for me, I have my own financial kind of goals and my own financial, parameters that I'm going to stick by regardless of other people. And I think we all have to respect each other's kind of goals. So otherwise I would tell everyone to do my trade, but it's probably not right for most people. It's not personal. This isn't shorts versus longs. I think people try to confuse this issue by trying to act like you're in a war and you're on one side and your side's going to win. The only side you should be on is trying to make your account as big as possible. And that's it. And it doesn't help me at all, for you to sell, other than, especially the way my position is constructed, I really only make money if the stock drops like a rock. Many people who own puts are the same way. So it really doesn't matter if the stock goes to, say, 20 today, and I'm really not going to make much money. And I can't just ethically, I don't feel comfortable just pulling out just because it went to 20. I'm here to see it through to the end. And that means low single digit stock price. So the whole long versus short thing, we're on different sides of the trade, but, share information that you think the other side is missing. So you could have a constructive dialogue where you can learn something and say, I didn't think of that before. And that's happened. I've gotten that from plenty of people who are long Cassava, and I looked into it, I learned more, and I still have the same opinion I have. But it's useful to have that constructive dialogue. And, if somebody is making a big bet opposite you want to know why. And, if you can't convince the other guy or they say, well, that doesn't matter because of XYZ, and you can disagree, but it's always good to have everyone's cards on the table if you can have it. And I'm one of the few people willing to do that. Obviously there's a couple of guys that shorted it, wrote a thing to FDA, and those guys are very smart and everything, but I have a lot of experience in industry, making huge bets on clinical trials and drugs, and I put forth kind of a different angle. Those guys are like very good biology guys. I'm a very good chemistry and clinical guy. It's two different parts of the equation here. And all the stuff they've said on biology seems right to me, and it's pretty terrible news for Cassava. Like the whole idea of having the wrong antibody is like just mind-blowing. But for me, the clinical and the chemistry side are really bad. And anybody that knows that side well is welcome to sort of explain to me. The problem is that there are a lot of people that really are brand new, and I'm happy to talk to them, but it's sometimes the best teacher is just seeing it for yourself.
So you've just said that the market seems to love this company even though the underlying value is not there, or at least it's not being shown, or it's very unlikely to be there. Have you seen in biotech the opposite, where there's extreme value, but the market is just failing to recognize it?
Yeah, all of the above. I mean, one situation that's very, very, very similar, and you'll see why in a second, was Elan Pharmaceuticals. Elan, and I was largely tricked by Elan. Smarter people than me were not, but a number of people on Wall Street, we bought Elan Pharmaceuticals. They had a deal with Wyeth, which became Pfizer, and it was for the first ever amyloid beta drug, and the trial failed. The company was worth $30 billion, and this was before phase 3 data. So Cassava is only trading $2 billion, and this was 10 years ago. The $30 billion is worth more now. And the company's stock went from $30 billion to basically zero. And, we were all duped. So here at $1 or $2 billion, the market's not really that fooled, because it could be $30 billion like Elan was. And Elan only owned half of their drug. Remember, Wyeth, the big pharma company that became Pfizer, Wyeth owned the other half. So it was like half of the drug trading for $30 billion, and that's before phase 3. So the fact that this is $1 or $2 billion,
partially filled.
There really
Order
isn't, that many people that are that, convinced by it. Nevertheless, there are a lot of people, like the GameStop or AMC phenomenon. There are a lot of individuals that are in it. And most people lost money in AMC, which 2 years ago, when I got out of jail, that was the stock everyone wanted to know. What do you think about AMC? I just said, I don't know AMC. I'll look at it. I looked at it and said the stock's dog, and it went down 95%. The whole AMC community hated me, and I can't afford to have more haters. I want people to like me. But I'm not going to tell you it's a good stock if it's a bad stock. And hopefully that trumps everything. But no, the AMC guys dug in, lost all their money, and I don't know who they're blaming, but they have nobody to blame but themselves. And SAVA is going to sort of be the same thing, but there are situations that are much bigger than that. It's like I said, Elan was massive, and then the other situation has happened many, many, many times. I'm trying to think of a couple of good ones, but Alexion was one of my favorites that just went up a huge amount. Viral Pharma was another one that was early in my career that kind of made my career. There is value in biopharma companies. It's Pharmacyclics was another one where Pharmacyclics had some decent data, and it was still only trading for a couple billion, and it would end up getting bought for $20 billion. It's rare that biopharma stocks stay in the gutter for many, many years. The most I've sort of seen them plod along is a year or two before they start to get recognized by the market or by big pharma. But every company has a story. Vertex went through many, many billions of dollars and failed like a dozen phase 2s before their cystic fibrosis breakthrough happened. So, it depends on what kind of company it is and stuff like that. So I do think, with the right management and new drugs down the road, even Cassava can turn themselves around. But, this isn't going to be the drug that makes makes Cassava successful.
Hey, why did the FDA approve phase 3 trials if there's like no efficacy, as I feel like you might be saying?
So the FDA, that's not the FDA's job. When a company files for a clinical trial, the main concern of the FDA is toxicology, and that there's so-called toxicology coverage for doing that trial. As long as there's enough animal data coming from 2 species of significant length, typically you need 6 months, 9 months, sometimes a year. And if you've done 2 species, usually it's dog and rat, those are the 2 cheapest ones, you can do basically any kind of study you want. Now, if you've had a lot of side effects and stuff like that, that's a different story. But as long as your drug's not hurting anybody, there's no approval or non-approval process. There is something called the study may proceed. But typically, when you file an amendment to what's called an open IND, initial drug application, what you do, or initial new drug application, when you add an amendment to your IND, sometimes it's called a series. This is like very in-depth industry jargon, but you file your new series filing to the IND stating what study you want to do. The FDA has 30 days to tell you no. If they don't,
Martin, I just want to know why they would send it to phase 3 if they know the drug would fail.
That's a good question too. I think the compensation rewards, and I just want to finish the first question. The first question is basically, why would the FDA let them do phase 3s? And the answer is it's sort of just the FDA's job to say, we won't let you do a trial if there's a tox problem. Like if you do 2 weeks of tox, you can't do a 6-month human clinical trial. You certainly can't do it 1 year. So they need a substantial amount of tox. And that's what the FDA is for. Now, filing to sell the drug as a prescription drug, that's different. The FDA says yes or no on that. And they think about that for 12 months, and then they decide on the new drug application, the NDA, as opposed to the IND. So in general, that's sort of the situation. It's really just a tox question. In terms of why would the company do it? That is a great question, because I can't imagine a company that would look at the phase 2 data and say, this is good, I want to invest more money into this. And I think that the only thing I could come up with is what I said earlier, which is I know Remy. I met him just exactly 20 years ago. And he was the founder of Pain Therapeutics, the CEO. And he's been through 3 big FDA failures, or 3 big clinical trials / FDA failures. He renamed the company, his baby, after a huge failure, crawled all the way back up from like $1 a share in stock price. And he has this drug. And for whatever reason, he and his wife and the chief scientist, they couldn't see reality. They were blinded by their past failures, the PTSD from that, the whole just like, I think history of the company. Any rational pharmaceutical company, I always had like 5 or 6 drugs in my pipelines. I would just say, okay, I don't need this drug to succeed. I will cut it. It's unlikely to work. Let me invest in the drugs I have that are likely to work. And I can always buy a new drug or find a new drug. Look at Vivek. He's found hundreds of drugs from Big Pharma. So just cut it and move on. But some people say, no, I really want to see in the big trial whether or not it'll work. Now, in the big trial, there's still some randomness in the phase 2 trial, but the likelihood of this big trial working is very low. Anybody could see that, but sometimes you just want to know. So in poker, it's a good example. You have a 2 and a 7, and the other guy's acting like he has 2 aces. An ace comes on the board. You're sitting there saying, oh shit, this guy probably has 3 aces now. And then a 2 comes on the board. You're saying, wait a second, now I have a pair of 2s. A pair of 2s doesn't beat a pair of aces, or 3 aces for that matter. But what if another 2 comes out, and he bets a big bet? Now you probably should fold your hand. But some people who are bad at playing poker may say, you know what, I really don't want to throw away these 2 aces. In poker, you can just wait for the next hand. In real life, there's emotions. Even on the poker table, there's emotions. But in real life, there's way bigger emotions. I just created this company. It failed for the first 10 years. I'm finally crawling back. I would hate to say I failed again, because I might have to get fired by the board, et cetera, et cetera. Let me just act like this was a success. And this happens in biotech. There are plenty of companies that will pursue a drug all the way to phase 3, even though it doesn't work, and it's a waste of shareholder resources. For whatever reason, that was the game plan. And it didn't end well because Remy was forced to resign from from Cassava along with his wife, and they both got sued by the SEC, and they settled, and the chief scientist got arrested. So I don't think anybody in the right mind, looking at what happened, if they knew this would happen 2 or 3 years from now, they would never have done that. But I would also say, why would his wife decide, if you read the SEC lawsuit, it was very clear that his wife took the data, the whole data set. In biotech, in clinical trials, if you have, say, 50 patients of data, you're supposed to show the 50 patients of data. She saw the 50 patients of data, saw it was bad, and said, I'm going to just show 25 patients because that makes it look good. And she came up with an excuse as to why it was logical to do that, but it wasn't. You always have to show the full data. If you want to show partial data, you can explain why, but only after you show the full data, because it's misleading to only show the partial data. That's like saying, well, my hedge fund made a lot of money. I'm just not going to show you all the losses I had. Of course, it made a lot of money without the losses. So, this is just plain and simple fraud. And she's lucky she hasn't gotten arrested, because what she did is way worse than Dr. Wang, who also played around with data. So it's a company that's played around with a lot of data, and that's not something that's rational. So doing another thing that's irrational and starting a very expensive, probably about $100 million, phase 3, really irrational to do. You wouldn't do it with your own money. And I always acted like my company's money is my money. And I think for a lot of publicly traded companies, they just sort of say, okay, well, if the shareholders will pay for it, they'll pay for it. Who cares? So I don't know what their way out of this was. Was it going to be more fraud? Was it going to be what exactly? I don't know, but it was definitely a crazy idea, and it's bitten them in the behind. But that is all in the rearview mirror. The big question now is, well, what is going to happen to this drug? Will it work or not? And we know in the next few weeks whether it'll work, but it certainly seems extremely risky. And that's why I just, like I said, I'd love to repair my reputation, which I think I got unfairly. One of the things that I'm happy to do is share my knowledge of biopharma. I'm not telling anybody to sell all their stock, but if you only own this stock, or you think this is a huge part of your portfolio, that this is going to be a big winner, just recognize that it's very risky. That's all I'm saying. I don't want to say the sky is falling. Of course, you know what I believe. I believe that the drug doesn't work, but I don't want to be accused of trying to manipulate you or change your mind. I would just say, if you have 100% of your portfolio in it, try 50%. You'll still make a lot of money. It's not 1%. It's probably 50-50. And you're already saying that there's a 50% chance I'm going to lose all my money. So it just makes sense not to have all the risk in the world and just wait, and see what happens with half the risk. And if you're comfortable, and most people don't go all in. So if you're not all in, this message isn't for you. Good luck here and you're bad. I don't really care what happens. I only care about the people that are so all in because they're been lied to or convinced that this is the next big thing. Those are the people that I'd say, just take your foot off the gas a little bit, because this is a very dangerous situation and it's not likely to end well. But as long as you are diversified, I don't care what happens to your portfolio.
You envision that the company would reverse merge after all this conundrum unfolds. But my question to you would be, what company would accept to reverse merge with Cassava, and what would be the motives behind a reverse merger? What would another company benefit from doing so?
Well, reverse mergers happen all the time in biopharma, even after companies fail clinical trials, or usually, actually, especially after companies fail clinical trials. One company I shorted a lot of was called 𝗕𝗢𝗙𝗘 way back in the day, 𝗕𝗢𝗙𝗘. They were a cancer company. I predicted their phase 3 trials would fail. They did. The stock went down like 95%. And then I actually met with the company to reverse merge my company with them. So, if you're a privately held company, you'd like to go public. And one of the ways you could go public is a reverse merger. So it's kind of a nice way to go public without doing the whole IPO stuff. You just can quickly, in one agreement, you can be publicly traded in three months. You get their balance sheet, you get their stock ticker, you get their name. You can change all those, but it's really nice and easy to do that. So I think that usually in those reverse mergers, by the way, the new company that's private will own 90% of the old company that's public. That's why they're called reverse mergers. Otherwise, it would be the other way around. So you're really giving away the company to a new company because you're not worth anything anymore. And this has happened a ton of times. And sometimes it's successful. Ironically, usually it ends up being that the reverse merger company has to reverse merge yet again in a couple of years. But there have been situations. I was short a stock called SNTA, S-N-T-A, for many years. And they had a very famous investor who was extremely smart at macro investing, maybe one of the best in the world, super rich billionaire. And he had all this money in this cancer company, but their drugs didn't work. And the stock went to basically nothing. And they reverse merged with a company called Madrigal, MDGL, which ended up becoming a fantastic company. And the billionaire ended up selling all of his stock, pissed off at SNTA, and he could have had a great run with what was left in Madrigal. So it's kind of ironic. But, reverse mergers happen all the time, and there's no, rhyme or reason to them other than one thing that you can bet on is that the reverse merger company is going to only own, the old company is only going to own 5% or 10% of the new company that reverse merges. So the shareholders, they don't get wiped out, but they get very diluted. And, it's very hard to make a lot of money after a reverse merger. But there's a lot of options for Cassava after the failure. I mean, you can license a drug from Big Pharma for $1 million. You can go to Pfizer or Merck. This is Vivek and I used to do this all the time. You go to Pfizer or Merck or Eli Lilly and you say, what do you got? What have you dropped? What drugs have you basically, when I say dropped, I mean, have you abandoned? And what will you sell me? And sometimes they'll call us and they'll say, hey, I got an idea for you. Do you want to develop an Alzheimer's drug? And they did this, GlaxoSmithKline did this for me and Vivek. And they said, we have an Alzheimer's drug. We're not going to go forward with it, but maybe you want to go forward with it. And of course the answer is, well, why don't you want to do it? And usually it's because the drug doesn't work. But they'll take $1 million or $2 million. Vivek paid $5 million for this drug. And, they'll sell you a new drug and you got a new lease on life. Maybe that new drug will work. So there's always life after death, but, it's still a new road to climb, this long hill of, okay, I'm going to pave the money. I'm going to get drug made. I'm going to do a new clinical trial. It's going to be a couple of years before I see something new. So I feel like, that road is always possible. But I think that Remy and his wife really couldn't accept the failure of Simifalam and start over because it was just too painful. They'd done that for the last 15, 20 years. And they were so close to success. And unfortunately, you can't force success, which is something I also had to learn early in my career in hedge funds, going through a lot of the same thing, quite frankly. The psychological result of failure is so punishing that you would just rather not admit it and kick the can down the road, but eventually the truth will catch up with you. So, it's something I learned a lot from, and I think it can happen to anybody, especially just, it's perfectly good people. They feel like they just can't let people down. And that phase 2 data was so bad that they basically manipulated it. And the next phase 2 data they had was so bad that they contrived this crazy explanation for why it was actually good data. And it doesn't make any sense. But some people believed it, and I just want to warn those people not to bet their life on it. If they didn't bet anything on it, I wouldn't make any money. So I want them to bet something. But I need the market to be somewhat irrational. But I don't want people to lose their houses over this. If they, Matt Nacktrap's going to be rich no matter what. But I want to make sure that everybody is going to, not get totally hosed in this.